Welcome, dear traders. You are watching a recap of the Asian session on August 16. Wednesday started with a slump in the region's major stock indexes to new lows. Japan's Nikkei dropped to 5-week lows, while Australian stocks showed the weakest performance in 4 weeks. The sentiment in the Asian market was dampened by rising fears about economic downturn in China and the gloomy outlook for its trading partners. Another reason why investors preferred to stay away from risk assets was a slide in the Wall Street indexes and the day before. Consumer demand in the United States unexpectedly turned out to be much stronger than the previous reading and the forecast. The indicator rose by 1% in July, while in June it stayed at the level of 0.2%, defying expectations of a 0.3% decline. This unexpected change may serve as a reason for the Fed to raise the key rate in order to tame inflation. In the meantime, Minneapolis Fed President Neil Kashkari said on Tuesday that the United States Central Bank had made some progress in its inflation fight, but interest rates may still need to go higher. Today, the U.S. regulator is set to release the minutes of its July meeting, which may give more clues about a possible dynamic of the United States interest rate. The recent reports indicated a robust economy, meaning that the Fed is likely to maintain its tightening cycle. The publication will reveal whether the hawkish or the dovish sentiment prevails among central bank officials. Another bearish factor to weigh on the stock market was the statement by an analyst at a Fitch Ratings. Earlier this month, Fitch, one of the big three credit rating agencies, has already warned that credit ratings of some U.S. banks can be downgraded. Yesterday, one of the agency's analysts added fuel to the fire by saying that another downgrade of the industry's score would force Fitch to reevaluate ratings on each of the more than 70 U.S. banks. On the back of this market woes, the US dollar index advanced to the area of 103.25, although in the early trade on a Wednesday, the greenback eased its bullish momentum. It has still outperformed most of its rivals lately. Against the basket of 6 major currencies, the dollar is holding near its highest level in 6 weeks. In the course of the Asian session, the US currency was consolidating inside a narrow price range between 103.10 and 103.30 ahead of an important news release in the United States. The dollar-yen pair has also entered a narrow range at the start of the session on a Wednesday. At the first, it was moving flat within the channel of 145.40 and 145.70. In the past 9 months, the Japanese currency has depreciated against the US dollar to critical levels where currency interventions can be considered. As the yen's decline has been going on for 4 consecutive sessions, markets are anticipating potential intervention from the Japanese monetary authorities, yet the only comment the market can turn to was from a Japanese finance minister Shunichi Suzuki. He said on Tuesday that authorities are not targeting absolute currency levels when it comes to intervening in the market. His comment heard similar remarks made in the past, including right before an intervention last year, as Japan's GDP data turned out to be way above expectations. Analysts shifted the critical level for the yen to 150 against the dollar. On a Wednesday morning, the dollar-yen pair was trading at 145.50, staying within the red price channel. As for the Australian dollar, it has also been trading in the red between 0.6428 and 0.6461 against the greenback. The deterioration of the Chinese market and its currency adversely affected the Aussie as its liquid proxy and set it to the lows of November last year. Besides, the Aussie is very sensitive to changes in risk sentiment, which is why yesterday's decline in Wall Street served as a bearish factor for it. In addition, falling oil prices put more pressure on the pair, extending its 7-day slide. In the Asian session on a Wednesday, the AUD-USD pair has retested its yearly low at a 0.6430. Even if the sentiment in stock markets improves, the Aussie will continue its moderate decline. For the New Zealand dollar, Wednesday became the time of a small triumph. After hitting the lows of November 2022 at a 0.5933, the Kiwi moderately recovered to the high of a 0.5970. This is how the quote responded to the hawkish forecast from the Reserve Bank of New Zealand. On the daily chart, the Kiwi dollar pair was hovering between support at 0.5931 and resistance at a 0.5982. Yet its upside potential remains limited, at least until the US data and the Fed minutes are out. And that's all for now. Leave your comments below and don't miss our next video review. Remember that staying up to date is a key to success in trading. Subscribe to our channel and see you online soon.